Hey everyone, welcome back to my channel. And today I'm just want to go over the levels that we have on the S&P 500. There's a lot of comments coming from Morgan Stanley. What's the base case all the way back to 3,400, and in the recession case, we will go all the way to the next key level. That will be the level 3,000 and the S&P 500. Now, there's a lot of strength, for example, on Tesla. That's doing very well. But the reality is those options are a little bit expensive, and definitely maybe not the week by week or month by month that retail traders work with. So in today's video, I'm going to show you exactly what you should be looking at. And they're pretty simple math. It's a little bit of physics, a little bit of gravity. If it looks like it's going down, you might as well just give it a shot and buy the put options. It's very important to understand that for you to be a more, I will say, more well-rounded investor, right? And for you to avoid panic selling, you definitely need to know how to trade options. And it will be my duty, my call to guide you in the next, in the years to come, when actually you need to know how or where you should be looking to either buy a put or buy a call. That's all I do. Some other professionals that like to do spreads, that's fantastic. But we'll go into the most basic. Exactly, the most basic strategies that you can follow when trading options. So let's jump and let's start with the S&P 500. That's right here. Well, like I said before, there are views. This is the bearish view. The other way around, this is the full extension, which is still what potentially may happen as long as the S&P price trades above this trend line. So basically, at some point, if we lose the 3,727 points, we're definitely coming back to this area of value, which is between almost 3,600 points and 3,200 points. Why do we need to understand this area of value? Because this area of value goes all the way back to August. This is August, September, October, and November of the year 2020. So this is not something new, and you will hear a lot of Mike Wilson at Morgan Stanley, and they have two cases. They have the base case, it means we rotate lower to 3,400 points in the S&P 500, and in the recession case, then we go all the way down to the next key level, and that will be the 3,000 level, which will be somewhere around April and May of 2020. So these levels are not new to anyone. They're not new. What you need to understand is how you are going to react. So you heard me before. If you really want to be a well-rounded trader, investor, it doesn't matter if you don't feel you're an investor and you're willing to take your position or kind of ride your position through a 30 or sometimes even a 40% drawdown. You need to understand how to use options, because it would allow you, it will make your life less stressful. Absolutely less stressful. So if you're willing to carry a position with a 30% drawdown, and probably you will add in the direction of the long-term expectation, you might as well learn in the short term how to offset such drawdown. Now, these levels are not new, okay? So Mike Wilson is not telling us a story that we don't know. Morgan Stanley, great bank, great American investment bank, perfect. Now, what should we do? Now, let's take a look at what's happening with, for example, XLB, materials sector. If we're in a slowdown, okay, one idea I want to share with you today, and that's why I want you to subscribe to my channel. We know I'm not from the US. My dad is a New Yorker. That's it. I'm going to tell you as much as that. But you have to see in perspective. You need to size the opportunity. The opportunity to the downside. Now, this is XLB. This is an ETF, exchange traded fund. A lot of people have read for many years, I would say for the last 10 years, how ETFs are tools to build wealth. Well, you can also use these tools to protect your wealth. How? Well, there's options. The ETF has options. They are available. So what I'm looking is, like, we have the breakdown. Look at this. I'm just going to assume this. Look at the breakdown. Then you have potential top. And it sort of looks like in August, everyone was thinking I was one of those. It actually achieved my upside target. 4,200 points. We had got an extra 100 points on the way to 4,300. That's fine. But there's a rejection. And now look at that massive rejection as well. Okay, one more time, you have a rejection of that level. Well, that doesn't look bullish. But besides looking bullish, the activity when you look at materials, if we are in a economy and the economy is slowing down, right? Well, you might as well say, well, materials, I don't know. I don't know about that, okay? We're not in that part of the expansion. So if that makes sense, well, we're not in expansion. We're not in a recovery period. Pay attention to that. So therefore, we have a rejection there, a continuation. We shouldn't be surprised to see it back to 69.70. Right now, trading at 72.90. Again, this is the XLB Materials Select Sector SPDR. This is an ETF. And absolutely, this level, it goes all the way to December of 2020. Now, the point that I want to make today is if we have a breakout, if we trade under 69.70, then we potentially come and see all this level back to $64. $64 shouldn't be a surprise either because it's basically the lows all the way back to November of 2020. So nothing new here. Now, what we want to do is, okay, so we might have a few stocks. I can use something that is absolutely, it shows you that it has weakness. It's not green, it's red. So absolutely shows you that it has potential to move lower. And we have the levels. So that will be another 10%. Now, 10% if you take a trade and let's say you're short the market. In this case, let's for the example, you probably make $1,000. Now, what if I take $500 of those $1,000? You don't have, that's what potential I'm looking to make if I take a big chunk of money. Now, I'm gonna take those $10,000. No, I'm gonna take that $1,000 that I potentially will make if I trade these to the short side. No, I'm only gonna take $500 of my expected profit. Now, usually people will say, I'm going to take what I'm willing to risk. No, let me explain why. So if you're looking to make $1,000, okay, I'm going to take only $500. Before, you needed to put $10,000, okay? So you were looking to put $10,000, yeah, to make a profit of 10%, which if you say, I need extra $1,000 in any single month, that will be helpful. But now, what I'm calling is that I will take $500 of what you were thinking to make, and let's see how far we can stretch that with a potential negative rotation. It's 11% to the downside, and I'm gonna go for this option. Now, I will place $500 in this option. It's trading, the ask at this moment is 120. Bid, it's 110. There's a 10-cent spread. It's not that bad. Usually people go with SPY or QQQ because it's only 1 cent. So that's why for many traders around, it's not only in the US, also in South Korea, Japan, Europe, it's the bread and butter because it's very cost effective. Go in, go out, and commissions for options are not really something that huge as they used to be 10, 20 years ago. So right now, open interest, 3,008 contracts, XLB, and I'm looking for the 69 put. Now, when we went over the levels, we absolutely know that if we have a continuation, a close under 69.70, it has the potential to move to 64. So we're giving us plenty time to play this idea. Okay, now, what should I expect? Well, you were looking to take, for example, the day-to-day retail traders, right? Day-to-day retail trader will take 10,000 to make 1,000 in that 10%, 11% move to the downside. I'm going to take $500. I'm going to pay no more than 125, 135, and I'm potentially looking to make the same $1,000, but this time with only $500. That's what I'm looking to do. That's my expectation. So the mechanics, it's very simple. I'm taking $500 to pretty much make the same that I will need with a big chunk of capital. And that's the beauty all day long with options, okay? So that's what I want to do. Probably follow up this one in the future because this is just a little bit of guidance. But as well, as I said at the beginning, if ETFs, they're being kind of in the mind of a lot of people like a tool, it's a tool to build wealth. Well, you can also use them to protect your wealth. So this is my video for the day today. This is an active idea that I will be following up. Now, I will follow up. And I also want to make sure that you remember that past performance does not indicate future performance. And what we do with options in this particular case is risk as low as we can, as less as we can, actually. As less as we can. We're risking very little money, okay? And we're looking to kind of achieve the same that if we actually have a big chunk of money, okay? So risk less, make the same, or even more. I'm buying around 125. If you pay 125, you're looking to sell 225, 250, around 375. I repeat, 375 will be your target in this case. 375, and if you risk $500, that will give you $1,000. But now you're taking $500 into that big parlay, that big money that otherwise, if you trade traditional ways, you will need 10 times. You will need actually 20 times that money, right, to make it work. So that's the video for today, guys. I thank you for watching, and I will have also in the description of this video, I will have my guidance. Okay, I will have my guidance for the SP500 based on the 300W rotation. That's something that I've been using for market structure that I've been using since the year 2016. I want to share that with you. That video will be in the description of this one, kind of unlisted, but it will be there. I look to do that every Monday. Guys, thank you so much for watching, and remember, someone always knows.